Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I got Clint Sorensen, Chief Investment Officer, WellShield, an outsourced CIO and investment research company, Nick Fusco, CEO of PM Insights, a pre-IPO secondary market pricing company, and Evan Cohen, co-founder and Chief Operating Officer of WinFinson.com, a media company focused on alternative investments. Okay, fellas, Perplexity AI. Yo, check this out. Check out this valuation stream. January 2024. That's like beginning of this year, right? $520 million valuation. June 2024, $3 billion valuation. That's 6 months for those that can't do the math. And then in October 2024, that's this month, they just announced $9 billion valuation. SoftBank came in on that June round, right? So that's proper institution. This is a company that went from 520 million to 9 billion in 10 months. Okay. I don't think this October round's done yet, but I'm seeing multiple sources come out and talk about it. So it's crazy. 50 million in ARR. I don't know what that math is. If someone's got a calculator, 50 million on 9 billion, but they do subscription-based revenue, enterprise search, and they're going to start selling ad space inside of their returns. And it's 15 million queries per day, search queries per day. So they're like a search engine. So my question, I've never used them. Okay. I'm going to start using them. This is blowing my mind. You guys ever use this? Evan, you ever used Perplexity?
Yeah. I think I got a free year of it through Uber One, not to promote Uber One. So yeah, I do. And so I have the mobile app and I've used it on my computer a few times, but I can't say that I use it all the time.
Okay. Got it.
For when I have used it, I found it to be pretty impressive in terms of the ability. It's generally good if you're looking for an answer to a specific sort of hard to answer question. Less about analysis, but more of I'll give you the example. My girlfriend and I were debating who is more famous. And this is, you'll all know the answer to this, but her and I were debating this as a couple does. Who is more famous today, LeBron James or Sam Smith, the musician? And I asked Perplexity to quantify it for me in this argument. And let's just say I won the argument. It was all great.
That's a perplexing question, so it makes sense, right?
Correct. And it was really good. So it not only restated the question to me, but it also provided some quantifiable metrics. It looked at Instagram, it pulled the number of followers for each one of the accounts, and it gave me a really detailed answer that validated that LeBron James is substantially more famous than Sam Smith, the musician, globally.
I thought
I was like, this is great. I'll pay for this all day.
But then your girlfriend checked it on OpenAI and it gave the opposite result. We just ignored that.
As a note, she works for Google and she's like, that's not what Gemini would say. So
I love it. So, all right. So Clint, though, 520 million to 9 billion is a lot, right? I mean, in such a short period of time. I mean, is that what do you think of that? Is that too much of a run and too short of a period of time? What do you think?
Yeah, I mean, I've said this a lot on this podcast, but it's hard to fathom any of these valuations at this level just because we're so early and we have no idea what it's going to look like,
right?
In terms of the long-term scalability of these products. So I think it's going to fully, not just Perplexity, I think all large language models are going to completely replace search in general. So that's first and foremost, and you start to try to do comparisons, but I think it's still an open field in terms of how to determine valuations. And I think they're somewhat just kind of pie in the sky decisions because the capital raising so effective in this asset class. I'm going to call AI an asset class, but I think there's just so much money chasing few names that these names are able to really command incredible valuations in terms of multiples of revenue.
Right.
And because the growth prospects are so large too. That's another thing. Whatever their annual revenue is, their growth prospects are unbelievable, and that's really hard to figure out because of how the size of the search marketplace.
Right. So Nick, do you think that maybe this valuation is kind of getting backed into? AI is expensive to run, right? And if these guys, I don't know if their their per unit economics work or not. I mean, I know you can go on to Perplexity and just use it for free. Then there's a paid model and everything. But I mean, is this just hey, we need cash because it's expensive to run this. I need $500 million and I don't want to dilute myself. So we're going to set the valuation at 9 billion and the people are just willing to put that money in because this it's 180 times current revenue multiple. That's a lot, right? So, I mean, are they just kind of backing into this because they need to keep the cap table the right way and people are okay with that? Or what do you think?
You know, I'm not going to be the judge of how they're arriving to this because it's a pretty wild journey. Like you said, my numbers are very, very similar. I mean, within a 10-month span, this thing just took off. But given that they're more real time, it probably does cost a little bit more to operate than some of the other models. And this could be kind of the situation of, the 1950s dance where all the first 5 girls that you wanted to dance with are taken. You're just like, oh, geez, who's left? And then there's Perplexity, and there are certain partnerships that you're going to be able to have with Perplexity that are really important, because I know we've talked about this a few times where you need data and kind of a lot of language to run an LLM, and that's why you're seeing the lawsuit coming out of News Corp aiming at Perplexity right now as well. Saying that they're coming after. You could read Wall Street Journal, or you could read the New York Post by asking the appropriate questions to Perplexity. And I think that's where you have like Rupert Murdoch coming out and saying, OpenAI paid us for this. They pay us $50 million a year for the next 5 years. What are you going to do? Do the right thing. So, it's very hard to say if it's a better setup than some of the others, or if it's just kind of the last party ready to tango, and that can be capitalized and partnered with others. And that certainly has a value, where OpenAI certainly has its tie-ups, and some of the rest, Anthropic, et cetera, do too.
Yeah, this is like an interesting space. What I can't quite figure out with Perplexity, though, like I know we've talked about like AI platforms, right? Like AI picks and shovels, AI platforms, and AI apps, right? And, OpenAI, Anthropic, the others, right? Gemini, Meta's product, right? I mean, they're all what I would call AI platforms. Perplexity, I don't know. I don't know. I guess the enterprise component of that can be considered a platform, I suppose. Maybe I could see applications of people building apps on top of Perplexity, or maybe it's a portion of what they do. But this one's a little interesting to me. I'm not quite sure what bucket I'd put it in quite yet. Right? It feels more like an app than it does a platform per se. But $9 billion, 520 to 9 billion is a lot. If I was owning this thing, man, I would probably be selling this. This is like, if I'm a VC and you own this, like sell it in the secondary, book the win. That's crazy, right? Come on. 9 billion, 520 to 9 billion in 9 months.
But to Clint's point, look, they're trying to dethrone Google. How Google's worth what? Almost $2 trillion or $1.5 trillion. Like there's a massive TAM, 9 billion. It's like, it's a tiny sliver of that market. If you're betting on the ability to disrupt that, it's a big opportunity.
But if they could disrupt it in 2 years to this point, then what's the barrier? What is their moat?
Right.
Are they just smarter than everybody, and there's no one else that can do it? I don't think that's the case anymore.
That's smart, because even if you got in at a 9 billion valuation and you only got 5% market share, or 10% market share, and it was growing, right? That's a $100 billion business. That's a 10x return from here, right? So
even 1% is massive.
Yeah. I feel you. Okay, fair enough. All right, guys. So let's talk Hugging Face. So I already liked Hugging Face. So Hugging Face is like an AI, like developer platform, what I would call like solution and tools business for developers to build and release AI solutions. I already like this business. I love companies focused on developers, right? It's a great business. But listen to these stats. The CEO was on this podcast recently that I listened to. So they have 5 million AI developers using Hugging Face, right? Wow. They have 2 million AI models on the platform, 1 million public and 1 million private. So like companies are using this and then keeping their stuff private, but they just use the tech to like manage their AI solutions. 300,000 public apps, and they got more. They didn't disclose how many they have private, but they have more private. 200,000 data sets to customize the models. It's got a $4.5 billion valuation. So like kind of the closest comp I could think for Hugging Face is GitHub. GitHub, right? They sold to Microsoft. They sold to Microsoft in 2018 for $7.5 billion. And Hugging Face is at $4.5 billion right now, valuation, right? So what are your guys' thoughts on Hugging Face? Like maybe, like Clint, we'll start with you, man. Like, what do you think of this? Okay, go ahead.
I love it. Look, I think there's power in community, and they've got the free. It is GitHub, essentially, is the way I kind of think of it. It's GitHub for NLP and for machine learning
Right.
programs, right? So developers can get on. There's a free service. Then you have the business model or the enterprise model, which I think is like $25 a month or something. I forget what the cost is, but ultimately, this business is all about, or AI is all about compute, and that race requires. I'm a big believer that I'll preface it with that race requires open source, and so I think that's why GitHub was so successful. I think Hugging Face is that model specifically applied to AI compute, and I think it's going to continue to grow. I think it's a necessary infrastructure play for AI and for AI to continue to scale.
Yeah, okay, so maybe Nick, we'll have you back clean up here with some like secondary market insights, right? But I mean, Evan, what do you think of Hugging Face? Do you like the company? Do you think it's something that's interesting at a $4.5 billion valuation? What are your thoughts?
I think it's a pretty hefty valuation, especially when you compare it to the GitHub acquisition in 2018. That said, the one thing what I really appreciate about the company compared to most of the other AI exciting companies out there is that they've remained relatively neutral. And I agree to what Clint said, like the open source element of AI is going to be a very crucial element of the success of the entire industry and how it grows and becomes mature. And with every other platform sort of starting an alliance with one of the big hyperscalers, Hugging Face remains relatively neutral. They kind of are able to play with all the different platforms. I think they're the biggest distributor of Llama out there right now. And so I think look, if you're bullish that we're in the third inning or second inning of this big AI developer movement, and you're either choosing a team aside, a hyperscaler side, or you're going open source, Hugging Face is definitely one of the premier places to place a bet on the open source community. The question really is like, who would come and disrupt them? And it would have to be someone like GitHub, who obviously has an allegiance to Microsoft, which obviously has an allegiance to OpenAI. So, because of the alliances, they kind of remain neutral, which is really nice. I think Replit, though, is certainly one to keep an eye on as well, because they are a massive player amongst the open source community. They've really doubled down on their AI inference and tools. And so it's also another player to keep an eye on if you're interested in that thesis.
Okay, cool. So what are you seeing, Nick, in the secondary? Is it last time I looked on PM Insights, I think it was a little thin, the secondary market. Is that still what you're seeing? What's going on, or do I remember that correctly?
Yeah, I think that's still the case, and they've when it's thin, it will bounce around with a bit more volatility, but that volatility has been seen between kind of the low fours, low fives, so 4 to 5 billion in terms of that valuation, and that's following the Series D. Funnily enough, that was August 2023 at 4.5 billion, but that's still up 3x from the end of 2022. And then the other one that I would pull up is GitLab, which I will say openly that I do own that, but that's about an 8.5 billion.
I like that.
Full disclosure.
Honest.
But that's a market cap of about 8.5.
Okay.
And yeah, it's to be told. I don't think it would be as valuable as that. It's priced not maybe a little over half. That's great, but I think these foundational models, anything GitHub, GitLab related, are so important in the world going forward. There are a couple million, I don't know how many millions of companies in the US. How many of them do not use some version, sort of a GitLab, a GitHub, or Hugging Face here? Especially with everyone leaning full bore into the AI, it's just kind of well positioned. That's how they've always been. So yeah, I love the company over the long haul. I do not own it personally, but if given the opportunity, I think it's a pretty cool one, even at the current valuation, to be fair.
Yeah, the name's great, right? I mean, the name alone, I think, is worth $4 billion. Yeah, the logo's the happy face with the two hands. I mean, come on. You can't beat it. No, but the stats are really interesting. I think few people, like the average person, the average investor, probably doesn't fully appreciate like the GitHubs, the GitLabs, like the Hugging Faces, and how important that is, right, to developers in kind of releasing and managing technology. So it's certainly fun. It's definitely falls firmly in that kind of AI picks and shovels, AI infrastructure place. So yeah, man, I think this is like degrees of success. with Hugging Face. But
Aaron,
if you were
to invest in Hugging Face last year or this year, what would you foresee as like the exit path? Is it a company that you think could go IPO, or it has to be acquired, or stays private forever?
Yeah, I think I agree with Clint. Like, I think it's probably an acquisition. Like these things, I think, especially for like one of the hyperscalers, like if it was an Oracle or a Google or somebody like to come in and grab this thing would probably make a ton of sense. Especially because you could, or like a Grok, right? I mean, I know Grok's like a similar size company, but Grok is also like Meta's AI platform. They're like one of the big, for inference use, right? Through Grok. So, there's opportunities even through things like that. So I think it's probably
NVIDIA. An NVIDIA purchase.
Yeah.
NVIDIA was exactly where my head went, but I just want to put that out there. Their goal or mission statement is as follows: democratize good machine learning and maximize its positive impact across industries and society. So will they do it?
Start a B Corp.
Maybe not. The number better be big to go against the mission statement, right?
Yeah,
well, look at Red Hat and IBM. Red Hat's another open source platform, kind of one of the starts. And then IBM scooped them up right after they kind of went full into AI with the Watson,
right?
Their Watson department. So I thought that was an interesting, very perplexing acquisition at the time, but now in hindsight, makes a lot of sense.
Yeah. This is I love this business. It's one of I have on research coverage, right? So we'll continue to keep an eye on it. All right, let's shift to Shein. So fellas, Shein is now going public in London. Okay, there's talk that they're going to go in early next year. Okay, they just added Barclays and UBS as book runners. So I think they had Goldman and Morgan Sachs. So they got the who's who is doing their book running for them, right? They're at a $45 billion market valuation, but that's down from $100 billion in 2022. So Shein's like fast fashion, or I don't know what's even faster than fast fashion. It's like that, right? So something hits the runway, they have a replication of it like hours later, and people can buy it online and it gets shipped to them. That's effectively it's clothing, right? Okay, so here's the question though. So this is going to be, I think, one of the biggest IPOs that we're going to have. I do think these guys will go public, and I think it's going to be in like that $45 million range. This is going to be one of the biggest IPOs we have, I think, in the next like 12 months. Here's the thing though, what indexes is it going to go into, right? Like this is the thing that it's so interesting to me. So it's headquartered in Singapore. That's a developed market. Okay. So that's like MSCI EFA. Its operations are in China, mainland China, emerging market, but they do all of its sales in the US and Europe, right? Which is developed. So I'm an old school indexing guy. I think it's mostly based on where the company's headquartered. There's some indexes that have different views, but this would be a developed market company, right? So I don't know, fellas. Like, what do you think? Like, Clint, maybe I know you're probably more on top of this than all of us, right? But what do you think? Where would you slot this?
I could see some index providers. Obviously, it'd probably be in the MSCI EFA just based on the headquarters, but I could see some index creators that are more China focused, including it there as well. Just due to the operations center there and the Chinese ties, right? And that's why it's been held up in terms of the U.S. IPO, kind of been blocked from that perspective. And even though it was the most downloaded app, I think, retail app, even above Amazon on the Apple Store. But their profits are down like crazy, down like 70% over the last year. So I know they've had some tough revenues are down, everything's down, but I think they've had I think their revenue growth has slowed from like they were upwards of 40% year over year. Now they're like 23% year over year. So they've had some struggles financially that have contributed to them not looking so great on the IPO side. Plus, obviously, the Chinese connection kind of blocking it here in the U.S. I think that has something to do with this, an opinion, of course. So, but yeah, I can see it in those two indices. I think the EFA, maybe a Singapore indice, so your Singapore specific indices, and then probably some Chinese indices as well,
right?
Especially on the retail side.
Yeah, I mean, Nick, where would you expect to see it? Maybe that's another question. Like, as an investor, would you be like, if someone said this is a developed market company, would you be like, I don't know, like I think it's more emerging market. Like, what are your thoughts? Where would you expect to see it?
I'm actually more curious if the index management will ever change how the index rules are written to include it or exclude it on purpose. That and that you don't really want to do very often.
Right.
You don't want to rewrite those rules, but this could be such a large exception given the size and nature of their business and how far reaching it is.
Right.
And then I'm actually just curious about the timing, right? Because as this is coming out, yeah, maybe I would put it more towards EM, but if China might be a hot button for the new political regime we may get in the U.S., then maybe you're going to lead towards more developed market, and that's where you want this thing to be portrayed and sit. It should look like H&M. It shouldn't look like the next hot Chinese company that we're going to have in a fund. So it's a very difficult question, and I think that's why those four banks are getting paid the big bucks on this and bringing it to market.
Yes. So, I mean, the other thing is too is I think so, Evan. I think ByteDance is headquartered technically in Singapore too. Does that sound right to you guys?
Yes.
Okay. So, but ByteDance to me, like I would say that is China because they get most of their revenue from mainland China, right? Where
a big portion of it for sure.
Yeah, like Shein makes like no revenue in mainland China. Like literally all of their revenue is from outside of China. So like this is where it's interesting. Like Singapore, I'm seeing this a lot where a lot of these like Asian tech companies are moving their headquarters to Singapore, right? And it's like they kind of went from like mainland China to Hong Kong and now Hong Kong to Singapore, right? And I think it's because of Singapore is a developed market. They're trying to like find their way into these developed market indices, right? But does that? I mean, what do you think? Like, would you put ByteDance and Shein in the same bucket?
That's a great question. I don't. Well, they're obviously not in the same bucket because they are different businesses. But yep. I do think when you look at the names of the bankers that are running the IPO, I think that's intentional. They're going bigger. They're going big. It's a big IPO. They're going for $40-50 billion. They've got the big name hitters on there. They have really extensive backers. Like some of the deepest pockets investors are on their cap table already. So I think that they're going for they're trying to avoid the emerging market look, and they're looking for a more developed market. Is my gut on it. And I would say that ByteDance certainly at their size, like it can't be emerging market, right? Like there aren't businesses that big in that kind of industry, right?
Yeah. Yes, that is true. That is true. I actually, now that I'm looking at it, it looks like maybe they're headquartered in China. But I'm going to come back. Yeah, ByteDance. I'm going to have to look at it again. But there's been a couple companies that have moved from mainland China to Singapore. So I'll come back next week with the list, right?
And is China really an emerging market at this point?
I don't
That's
think
another question. You know what I mean?
I'm biased. I'm co-founder of Crane Shares ETF, so like I'm a little biased on whether China's an emerging market
exactly.
or not, right? But what do you go ahead, finish that thought, Clint.
No, I just think it's a developed market. I think it's second largest economy in the world. It's a developed market. At the end of the day, I think that's what it is. And so I would expect companies that are in China or headquartered in China or operations in China, even if they're headquartered in Singapore, if they're large companies and they're part of the second largest economy, I would expect that to be in a developed market index at some point in the near future. I think it's still silly that China's considered an emerging market indices. And I think that's just the way I think that's just the way those rules are written, to Nick's point earlier.
Yeah, I agree.
Yeah, I got to tell you, what the one thing, maybe last thought on this, like China, to your point, Clint, like a lot of international investors, I think are very uncomfortable investing into mainland China, right? Even not only in the public stock market, but in the private stock market. But that being said, like China, it's pretty clear China's like a very fast adopter on a societal level, probably because of the way the government influence on the society there of AI. right? They're opening up like AI-driven hospitals already. I mean, they're like way ahead. There's no discussion about whether it's good or bad for society. They're like, we're doing it, so get on board, right?
And
so like
quantum computing too.
Yeah, right.
Yeah.
So like, I mean, you can imagine like already every day I'm seeing new companies in the robotic space in China, right? I mean, their population's going down fast. So they're going to replace people with robots. They have to have that if they want to continue their manufacturing base. But a lot of their consumption just happens internally within China. So they got a lot of companies just focused on Chinese customers. Chinese businesses focused on Chinese customers are huge businesses, and international investors aren't participating. It's just a very interesting dynamic, right? When you think about like venture investing or pre-IPO investing, like we rarely talk about Chinese companies, the four of us on this thing, because they don't really trade. Like no one's really discussing these mainly outside of ByteDance and Shein, which we discussed may or may not even be Chinese, right? But like it's a very interesting dynamic. It's and I just wonder if there's like really a lot of missed opportunities because no one really considers these companies, right? Especially in the venture space.
Let's pop it on the agenda for a week where we only discuss international companies.
Okay, fair enough.
That'd be good.
I like that. We can pull some stuff together. So
great.
Okay, fellas, let's end it there. I appreciate you guys. It was good to see you. I missed you last week, right? So I'm glad we were able to do it again. Get the ball
See you guys.
All right,
Thank you.
See everybody.
Okay,
Thanks, Joe. Thank
I'll
you.
take care. All right.